As we see these tensions ramping up between Israel and Iran, what's your assessment of the situation in the Middle East right now and the prospect of, supply disruptions here, maybe even a price spike if we saw the situation worsening from this point on?
Well, Dan, thank you for having me on the show. Great to see you again. You're sitting out there in the Middle East, Dan. I've been on the desk since mid-1970s trading crude oil. 1979 Iranian Revolution, 1980 to 88 Iran, Iraq War, Gulf War I, Bush father, Gulf War II, Bush son. I have not seen a market so volatile. I have not seen tensions reach this level in a long time. Yet the market seems to be able to absorb some of this. I would assign a premium of about 15% volatility. Prices are moving wildly, buffeted by random political events. I mean, just the other day, Joe Biden misspoke and hinted that they might take action, that Israel might retaliate against Iranian oil fields, and you had a nice 5% spike in prices last Thursday. It bounded up over $80 a barrel. Now, I've been on CNBC last month with your colleague Tanbro, and I reset the cap of the market around $82. That looks reliable now, but I think you're correct. Any combination of factors, wild actors, wild cards, Houthis attacking ships going through the Straits of Hormuz could send prices higher. And we're seeing that also in the trade in options. There are more companies coming out buying call options. There's insurance policies against this spike in oil prices driven by geopolitical events.
John, what we're attempting to determine now is if Israel were to strike Iranian oil targets, what impact would that have for prices? You have such a depth of experience in this market. You've seen many similar situations before. As you say, nothing quite like this. What is the market impact that we should be looking out for if that scenario does eventuate?
Well, Dan, there's going to be a headline effect. The fact that, bombs hitting upstream facilities. Recall back in 2019 when the OPEC and Ghawar fields in Saudi Arabia, comprising 6% of the world's global supply, were hit by drones. That sent prices surging, but the Saudis had enough supply to weather through that incident. Now, with Iran, yes, it'll send prices higher, but when you step back and look at Iran, this is a sanctioned country. They've been under restrictions. They've had monitoring control over their exports. And you put their production right around 2.5 to 3 million barrels a day. Exports far lower than that. A big share of their exports end up going to mainland China, into Shandong province, to some of the independent refiners, or as we call them, teapots. So they're really not that big a factor, but even taking 500,000, 1 million barrels a day of exports out could have a dramatic effect on prices. So while Iran is not as critical a player as, say, the Saudis or Abu Dhabi or Kuwait, still this is going to have a dramatic effect. It's going to rattle the nerves of the oil markets. And I'll say traders out there, they're going to love this volatility. They live for it. Give them a market that moves. Give them a Richter scale kind of market because goes up, goes down, you can make profits. The worst thing they can imagine is a flatline market with no heartbeat. But I think we've got to lock and load and get ready for a wild ride ahead here the next few weeks, Dan.
Okay, a wild ride ahead. And also, we're coming into the U.S. election, John. If prices were to spike significantly off the back of any Israeli attack, how would you expect the Biden administration to respond?
Well, okay, since day one, when President Biden took office in January of 2021, his first day in office, he canceled the Keystone Pipeline. He took measures to limit drilling in Alaska, in federal lands. I mean, he was no friend of the oil companies. Yet a year later, after you had the Ukraine invasion, Feb 22, he goes hand in hand. I mean, he called the Saudis a pariah state. But a year later, when prices spike over $120 a barrel after Putin invaded Ukraine, he made a trip to Saudi, met with Mohammed bin Salman, the crown prince, asked him, please, please produce more oil, level these prices. Well, given what he said in the past, the next week after his visit, actually they reduced production, sending prices even higher. Joe Biden, I think, has flip-flopped on his dealings with like any good American politician. He's been inconsistent in how he deals with the oil companies. And I think Kamala Harris has got to bear the brunt of that legacy. She's been part of it. It helps her in saying she's now in favor of fracking when she wasn't historically, but that's been part of the Biden program. But I think that, what you're going to see is a continuation of policy there. Trump will probably, restore the relations with the Saudis. It's hard to say what the effect is going to be, but I think, the more dramatic effect is going to be on the geopolitics. What's going to happen to the wars in Ukraine, to the Hamas, Israeli, Iran situation? I mean, and I think this is going to be a deciding factor, come the first Tuesday in November.
Indeed, foreign policy certainly on the agenda as we look towards the US election. And John, I also have to ask you about the OPEC policy response as well. How do you see the OPEC ministers balancing these production curbs with the need to maintain market share moving forward?
Well, the last thing I'm going to do is say OPEC is not long for this world. There's too many people who've said that. They've ended up in a graveyard of failed quips. But OPEC is facing challenges on multiple fronts. In the last few years, you've had several countries, Qatar, Angola, leave the group. They've faced increasing challenges from non-OPEC production, particularly in the U.S. I mean, it wasn't that long ago the U.S. Was moving towards a model of returning shareholder value, not betting everything on building up reserves and production, but to wisely managing their assets and not overproducing. Now you've got the U.S. as the biggest producer in the world in terms of crude oil, condensate, and liquids. What OPEC's got to do, they've also got to ensure internal compliance here. In the old days, whenever you'd have a quota buster, I used to say quota cheating. I was in a meeting with an OPEC country, and they said, please don't use that word, Mr. Driscoll. It's leakage. But, okay, leakage. In the old days, when countries would overproduce, the OPEC ministers would say, okay, don't do that again. They get a stern warning. Now, under Abdulaziz bin Salman, the Saudi minister, you have to pay compensation. You have to reduce future production to compensate for past overproduction. So they've got to enforce that with Russia, with Iraq, with the Kazakhstan, the consistent quota busters. And they've got to do that. There is kind of this outside chance that behind closed doors, the Saudis could even pull out. If you don't toe the line, we could flood the market with more oil, and they could send prices catapulting down to the levels of $50 a barrel. That is a possible scenario, one of many out there, Dan.